Hi there, welcome to the program. Let's get a quick look at what traders are watching. And just breaking at this time, we're getting word that the US President Donald Trump has had a conversation with his Mexican counterpart, Claudia Sheinbaum. Also getting word that the Canadian ministers are speaking amongst themselves, saying they're agreeing that we need to work hard to ensure our border is safe and secure and to crack down on illegal drugs. Mexico reportedly has also agreed to ensure that there will be no illegal migrants crossing that big border. So Trump speaks and the international community listens as well as traders. We've also got Chinese state media warning Trump against destructive tariff war. We had that data out in the US last night. So pretty strong fourth quarter GDP read, inflation continuing to remain above the US Fed's target. So we've got oil steady after a surprise rise in US gasoline stocks. Copper was steady, getting a bit of support from that weaker dollar and those bets on China stimulus. And gold has trimmed its gains on that data coming from US inflation, but look, finding support because of that softer US dollar as well. I wanted to get right into the technicals though. Nick Twidale from ATFX joins me now. So Nick, this is the environment that we are leaning into right now. Any headline coming from the incoming Trump administration in regards to tariffs and the global response to it will immediately dictate volatility in FX.
Absolutely, yeah. I think it's, for a lot of us, it's deja vu all over again, isn't it? We're going back 5 or 6 years to when we spent all our time sitting on a trading desk looking at Trump's Twitter account. And already we've seen, just this week, we've seen huge moves in the MEX, in China, in the Aussie to a certain extent as well, and obviously in dollar CAD. So today was more positive for those sort of tariff trades, as some people are calling them, but he can easily swing the other way. So we are seeing big percentage moves. I know on Monday we saw sort of 3.5% in the dollar MEX just within literally sort of 2 or 3 minutes after the first comments came out. So more of the same to come, I think.
But that's good for traders.
It's good for traders, yeah. I think it's good, it's exciting. We're seeing volatility. For consistency and for trends, it makes it a little bit more difficult.
Yeah, all right. Well, maybe the charts will get us a little bit more abreast when it comes to trends. I think we're starting with the Australian dollar hourly. So given all of the threats for tariffs in China, am I right to say that the Aussie has held up quite nicely?
I think so, yeah. I mean, we've had a big move down. We've had nearly 7% over the last quarter. And it has been a big move, but it has been holding up nicely on the crosses, but it does start to look a little bit weaker. I think what a lot of traders are looking at is how much those tariffs will impact China in particular, and we always trade Aussie as a proxy of China. Yeah. It's going to make things difficult from a diplomatic point of view with Australia because it's close ties with China and obviously the close ties with the US as well. So it doesn't look great for the Aussie battler moving into the first part of the Trump administration. The hope came over the weekend with Scott Bessent coming in, perceived to be more moderate and that he will try and trim some of these Trump policies. But as we've seen in the past, I think people forget about what happened in the past Trump administration. Is if people didn't play to his game, he generally got rid of them, didn't he? So whether he'd do that with the Treasury Secretary, I don't know.
This is true. So what are we looking at here, Nick? This is the Aussie Daily.
Here's the Aussie Daily, right? So this is the bigger chart. It has come down really nicely off that 70 cents and we're just sitting just beneath 65 again. It's really struggled to get above 65.30 over the last week or so. And we're looking at challenging those lows which come in sort of where the trendline support is, which is now sort of just above 64.50, and then the yearly lows another like 50 or 60 points below that. If it breaks, it could really start to motor to the downside. We'd have to see the dollar appreciate for that to go.
Yeah, and so that, well, we'll get to the dollar after, but on the crosses, talk to us about cable and what's happening there.
So sterling seemed that both sterling and euro, in fact, overnight, they saw decent bounces. We saw about a 0.7 drop in the dollar index overnight, which a little bit of a surprise, I think, given what the US data is. But if we look at what we've got going on this week, we've got a lot of geopolitical concerns, and we've got the Thanksgiving Day holiday. And as we know, liquidity is going to be a huge issue, and it's not just today; it's Friday as well, because most traders take the Friday off, and it's skeleton desks in New York. So that Friday session gets a little bit messy always. I think we've just seen some profit taking, to be honest. I think from the fundamental point of view, you'd still want to be buying dollars. So that's why we're looking at these charts.
Let's bring up the sterling, okay? Yeah, there we go.
And that's kind of most traders are trying to get with this downward trend that we've seen over the last quarter or so. So sterling's probably a good example. It's On the daily chart, it's a little bit higher, but you'd be fading any moves towards that 128.18 200-day moving average. And I think a lot of people are looking to see if we get these downside breaks, if the dollar starts to accelerate into that Christmas period, you'd be looking at selling a break of that downside level.
And the euro, I mean, it's so battered and bruised. Parity has been mentioned. What are we looking at here in terms of,
I don't think you can
support?
discount parity even in the next, maybe even before New Year. If we do start to see some of these numbers coming in, and we're going to be looking very closely at the Fed over the next few weeks as we come in, we'll look at that US data. If it starts to look a little bit smelly for those rate cuts, then we really could see that there's a lot of people still calling that the Fed won't cut in December. I think it's at 65% that we get 25 basis points. If they don't go, you could stick parity on the euro fairly easily.
So what would be the fallout from the euro at parity?
I don't think there's going to be too much pain at parity. It's that parity party we all talk about it. We've been down to the 90s and we've been down to the 88s before. I don't think there's going to be too much, but there will start to be a concern. There'll be a concern from the States as well if the dollar starts to appreciate too hard and too fast. But for European countries, I mean, it's obviously going to make their exports a bit cheaper, despite the tariffs then coming on top of them. I don't think there's going to be too much pain. I think it's just a bit of a psychological barrier, but it could very well happen.
Okay, so now when we think about the US dollar toward year end, what if we do not get an interest rate cut coming from the Fed?
I think it really does step up, and I think we see breaks in a lot of the majors. We've already seen breaks in, say, dollar CAD, for instance. That's hit a 4.5-year high. I think the euro goes, I think cable goes, and I think Aussie goes as well. So we'll see big figure moves if they do not go those 25 basis points.
I know that we've got market pricing, but you've been in these markets a very long time. Would it be a complete shock if they do not cut even by 25 basis points?
I don't think it would be a massive shock. I think we'll look at the data that's coming out in the next couple of weeks and you'll start to hear a bit of rhetoric, and I think we've already heard it from some Fed officials, because the Fed aren't stupid. They know what's coming, and the market's already pricing in what's coming with the new Trump administration. So they don't want to be in that position where they've cut rates hard and then they're going to have to raise them again to counter this inflationary measures. Now, it's all going to be a timing game, but it may be that they hold pat at this meeting and then look to go again early in 2025. But it's a tricky one. I think it's more 50-50.
Yeah, right. Okay, well, it's going to be interesting times toward the end of the year. Nick Twidale, we'll talk to you before then. Thank you so much from ATFX. And that is the trade for today. Stay with us. We've got plenty more coming up.